Welcome back. This is the Looking at the Charts report for the 21st of April. Today we'll be looking at 4 instruments. The first is Netflix, second is US 100, third is natural gas, and the fourth is EURJPY. Enjoy the report. We make a start with Netflix 4-hour chart. So after the large sell-off, the company suffered with a rather disappointing earnings report announcing subscribers had dropped. Netflix opened with a negative gap and closed the session at $225.80. If this trend is to continue, we could see the price action moving lower towards the S1 191.25 support level. In a more intense sell-off scenario, traders can also use the S2 147.80 line and the S3 111.75 hurdle. On the contrary, if the stock comes under buying interest, we could be seeing a jump towards the R1 258.75 resistance. Other levels we have noted higher are the R2 296.65 or even higher the R3 336.40 line. Please note the RSI indicator for the 4-hour chart has dropped to the 15 level, displaying the strong sell-off performed previously. We move now to US 100 daily chart. In the past days, the index had dropped and tested the S1 13,835 support level, but managed to rebound to higher grounds. Since the S1 line had not been breached, we could be viewing a trend forming towards the R1 14,465 resistance line. If the R1 is breached, the road could be set for the R2 15,250 resistance to be engaged. Please note the R2 is a 2-month high level, and if the price action breaks above it, we may be seeing intense bullish interest for the index. For this scenario, we could also note the R3 15,925 level, which was tested for the last time back in January. In case the trend turns downwards, US 100 could retest the S1 13,835 or even fall below it, making the S2 13,065 the most probable level to be engaged. Please note the RSI indicator below our chart is running across the 47 level, implying some stabilization may be forming. In our opinion, the index is currently in a sideways trend line. The range between the R2 and the S1, which is highlighted with gray on our chart, could prove key, as a move above or below can be an indication of further trend forming. Moving next to natural gas 4-hour chart. In the current week, natural gas has performed a notable correction to lower grounds and has somewhat stabilized. Natural gas has been moving upwards for consecutive weeks, thus the correction is rather interesting. At the moment, natural gas is heading towards the R1 7.15 resistance level, and a possible breach above it could lead the price action to the R2 7.4 line. If the price action is to be dominated by selling interest, we could see the S1 6.70 support being engaged. Lower than that, the S2 6.35 level is also imminent and could be targeted in a selling scenario. Please note the RSI indicator below our chart has reached the 40 level, displaying the selling interest may have stabilized for the time being. Natural gas trading is, in our opinion, directly related to the Russian war in Ukraine. Headlines on this subject can prove key to understanding the energy commodities price trend. Finally, the EIA natural gas storage level will be released today, the 21st of April, and can move prices according to the outcome. Finally, we move to EURJPY 4-hour chart. Among the major forex pairs, EURJPY remains among the strongest to the upside in the current week. In case the currency pair continues to rise, the R1 140.65 resistance could become a target first, while the R2 141.55 could follow if the trend moves even higher. On the other hand, a correction to lower grounds could send the price action to the S1 138.55 support or even lower to the S2 137.60 level. Very important is the fact that the currency pair has been lifted to prices seen for the last time back in 2015 and has formed an almost 7-year high. The RSI indicator has returned to the 70 level in the short term, implying some stabilization may be in play. Please note, the 22nd of April is expected to be a very exciting day for the markets, with the preliminary PMI data from Australia, Japan, the Eurozone, the UK, Canada, and the US expected.